Ladies and gentlemen, welcome back to the channel. At the time you are watching this video, you are likely getting NVIDIA earnings that are coming out. Now, there's really only one thing you need to know in regards to this. No matter what happens with NVIDIA, one thing is important to know. If the AI trade remains intact, then markets probably do okay from here. You don't need to see a crash in markets, even if NVIDIA falls, let's say 2 to 10%. If NVIDIA falls 2 to 10% just because, expectations were met, guidance was exceeded, kind of the same old we've seen recently with NVIDIA. Basically, if we get that again, the AI trade remains intact. And I think at that point, you could actually see a broadening out of our markets. A stock like AMC could start to do better. A stock like PayPal could start to do better. And a stock like Tesla could start to do better. A lot of your small and mid cap names. What's happened over the past couple of months is NVIDIA and your other AI names have drawn so much market cap from other areas of the markets because there's not inflows to our markets. And it's went into NVIDIA. If NVIDIA does give that back and sees a little bit of a breather here, then that could be very good for other areas of the markets. Now, in the event the AI trade comes crumbling down, if NVIDIA is forecasting not so good, guidance, maybe demand slowing down somewhat, that's going to put a whole question mark on the entire AI trade. Keep in mind, the AI trade is what some people think $1 trillion worth of Microsoft's valuation today. Google, Amazon, these other stocks, they're hundreds of billions of dollars of essentially added market cap value to those names. So if you were to see a big decline in NVIDIA, that's probably really bad for the entire broad markets. So yeah, that could be a little bit of a problem. If there is any big changes to NVIDIA earnings, I'll bring that to you guys in a video later on today. But, let's be honest, you're probably going to get the status quo from NVIDIA, but who knows? I think that's really the thing that you need to be watching for right now. Does the AI trade entirely take a bit of a breather, or is the AI trade intact? That's the biggest question, and depending on what NVIDIA says, they're the godfather of AI, if you will. They're going to affect Microsoft, Apple, Google, Amazon, all of your biggest name companies. With that being said, AMC stock is down 3.11% today, and ladies and gentlemen, we need to talk. Here in After Hours, NVIDIA reports Rivian, Etsy, Synopsys, Lucid, Sonova, Dutch Bros, APA Corporation, Marathon Oil, and Suncor Energy. Synopsys is also another AI trade, if you will, and they've done very well recently. So if Synopsys also gives you maybe not so great earnings, and NVIDIA, that's going to be a bit of a problem for our markets. Now, coming tomorrow, you will get Nikola, Moderna, Fiverr, Wayfair, Pioneer, First Source Builders tomorrow morning. In After Hours, Block, Carvana, Mercado Libre, New, Booking Holdings, Intuit, Indie, Vail, Live Nation. And then Friday pre-market, you will get Warner Bros. Discovery. But overall, NVIDIA could really dictate the next couple of months, essentially, for our markets. If you look at things like the dollar, I've pointed this out many times here on the channel already, but if you look at the dollar, typically these inverse the S&P. So when the dollar rises, the S&P falls. When the dollar falls, the S&P rises. What's happened recently is the dollar has been rising, so that means the S&P should have been falling. That hasn't happened. I would argue that's because of the AI trade adding so much value to your largest market cap companies. Whereas since the start of 2024, when the dollar has started to rise, you've actually seen a stock like AMC do poorly. Stock like Tesla, stock like PayPal. Your average stock has not done well since the dollar started to rise. So you could really see a catch up to the downside if NVIDIA does throw cold water on that AI trade. So that could be a bit of a problem. Now, here on the day today, you also had the Fed minutes. The Fed minutes brought down TLT, thus the 10-year treasuries did go higher. 10-year treasury yields at the time of recording this video are up about 4.5 basis points. Now, what did the Fed minutes actually say? Well, a good source for all of the headlines here for the Fed minutes or for just other, news events that come out is financial juice here on X. They make it very simple. The Fed minutes says some policymakers said slowing the pace of balance sheet runoff could help smooth transition to ample level of reserves and could allow the balance sheet runoff to continue for longer. So that was the bright spot from the Fed minutes, is the talk about the balance sheet runoff. They also did say that next Fed meeting, there's going to be in-depth discussion about the balance sheet runoff. It says the staff placed some weight on the chance that further progress on lowering inflation could take longer than expected. It says Fed staff saw risk to the economic forecast skewed to the downside. Noting restrictions and overnight reverse repo usage, many officials said it would be appropriate to start in-depth balance sheet discussion at the next meeting. These balance sheet discussion quotes here, really the only positive thing that came out of the Fed minutes today. It says officials highlighted uncertainty around how long restrictive policy stance would be needed. And again, as long as we continue to see the economy doing okay, then the Fed's going to opt to keep rates higher for longer. Now it says staff economic outlook was slightly stronger than the December projection. So economy was a little bit stronger than the Fed thought it was going to be. Several policymakers emphasized importance of communicating clearly about data-dependent approach. So basically saying, hey, we got to make sure the markets understand that if the data does not play along with cutting rates, then we're not going to. We're going to do whatever the data says we should do. While risks to achieve dual mandate goals were in better balance, officials said they remained highly attentive to inflation risks. Policymakers generally noted they did not see it as appropriate to lower funds rate until gaining greater confidence in inflation moving sustainably towards 2%. So if we don't see any kind of economic disaster, or if we don't see inflation start to, come down even more, if let's say the next CPI report comes in hotter than expected, the economy continues to run at a hot speed as well and do good, well, you're probably not getting rate cuts. And I don't think markets are prepared for this, but I think you should be. There is a chance that we don't get any rate cuts in 2024. If the economy continues to do well and inflation continues to run on the hot side, the Fed may not cut rates at all. And that's something I don't think markets are priced for. The Fed minutes say some officials noted progress on inflation could stall. Most Fed policymakers noted risks of easing too quickly, emphasized importance of incoming data and judging if inflation is moving sustainably to 2%. And Fed officials judge policy rate likely at its peak for this cycle. A couple of policymakers pointed to downside risks from maintaining an overly restrictive policy stance for too long. So, for the most part here, does not sound great. It sounds like we either need to see the economy get worse from here, or we need to see inflation continue to fall from here, or we're not getting rate cuts. Now, the point about quantitative tightening, now that is essentially where the Fed has been rolling off assets from their balance sheet. So adding net selling pressure to treasuries or adding supply to treasuries. You can see this in TLT. This is the ETF for the 20-year treasury. Now, the Fed owns a lot of short-term duration bonds. Doesn't matter. The same concept applies. But when you have a bond market that revolves around supply and demand, when you get more supply onto the market and not necessarily more demand, then what happens? In the case of bonds, bond prices fall and the yields rise. So this $60 billion of treasuries the Fed has been rolling off their balance sheet each and every single month, that has added a lot of upside pressure to yields in the treasury market. The Fed is saying by next meeting, they could decide to lower that pace to maybe $20 billion and just allow for a longer term runoff instead of aggressively trying to reduce the size of their balance sheet. This would likely be good for markets, although it would take longer before the Fed would ultimately stop quantitative tightening, reducing assets off their balance sheet. That would be a dramatic slowdown in pace. And that would likely be good for equity markets. That's why you did see the NASDAQ and the S&P move higher off of those quotes that were coming across the newswire. But I mean, when you consider all the other things we just read, that the economy is is strong. The Fed may have to keep, rates higher for longer. They're not in a position to start cutting rates. Some of those things really outweigh this quantitative potential easing stance that the Fed could take, because last week CPI came in hotter than expected. Last week PPI came in hotter than expected. Retail sales came in worse than expected, but it wasn't that bad where you're really questioning if the economy is, getting worse or heading into some kind of recession right now. So that was, a little bit of maybe not so great news for the markets. That's why you do have the NASDAQ down about 1.5% at the time of recording this video. With that being considered, AMC stock down about 3%. I think that is perfectly fine. Now, again, it's going to come down to what NVIDIA does here in after hours and how the earnings come out. Heading into the report, NVIDIA is down about 4% right now. So you've definitely seen some anticipatory kind of selling. The stock is down almost 10% from its all-time high. But again, if the AI story is kind of dissolving at this point, that's going to be bad for the broader markets. Not just NVIDIA, but for the broader markets. If the AI trade is still alive and NVIDIA is still seeing some really good demand, and maybe they just post some, expected numbers, then I think the AI trade stays alive. Microsoft doesn't have to sell off because their AI hopes and dreams are over with, right? Same with Google, but it could just mean a little bit of short-term pain for NVIDIA. We'll have to wait and see. Maybe NVIDIA comes out and gives us something super shocking that we didn't see coming, and maybe the stock just continues to rip higher. We'll have to wait and see. I do think it's highly likely that NVIDIA does fall after their numbers do come out, but then again, the stock has fallen 4% for 2 days now in a row, so it doesn't necessarily have to continue to sell off. A slight sell-off in NVIDIA, coming tomorrow, probably be a positive thing overall for our markets to get some money moving elsewhere. Now, if we take a look at AMC stock, again, slight sell-off in NVIDIA, AMC probably does well. Big sell-off in NVIDIA, AMC probably does bad, and that goes for the broader markets also. Now, AMC over here on Ortex, you do have 12.18% short interest of free float, $142.13 million worth of short positions, days to cover 1.82, 30.5 million shares that are currently sold short, shares out on loan 32.36 million, cost to borrow 1.02%, utilization 49.26%, and a short score of 63.92 out of 100. Cost to borrow fees about 3% currently. Now, option activity, very strong today. Volume about 64% to the call side and 36% to the put side. You have one hedge fund and institutional trade. That is a February 23rd, so this Friday, $5 put worth about $51,500. So not a lot of hedge fund institutional option activity here today in AMC. That makes sense as everyone is kind of holding their breath waiting for NVIDIA to report their earnings. Now, AMC stock, we could take a look here on StockTwits. We do have sentiment that is neutral today at 53. Yesterday was 65. That was bullish yesterday. Message volume, a little bit higher than yesterday's 44. Today it's at 48. And the participation ratio is back in normal territory at 54, although 55 is technically considered high, and you were there just earlier today. So overall, really healthy numbers that we are seeing here. And I do think really when it comes down to NVIDIA, and as long as the report's not bad or guidance is not bad, AMC stock probably rallies here to the 50-day moving average at $5.11 per share. That would be my personal opinion, although, we've seen crazy things happen in the markets, and it wouldn't even surprise me if NVIDIA fell like 20% after earnings. So we'll obviously have to wait and see. The big story is really going to be AMC earnings, specifically for AMC. That will be next week, and Adam Aron has really touted, I don't know how to actually say that word, the earnings call, and we need to listen to the earnings call, and really hinted that there could be some good news coming on the earnings call. Adam Aron said he has a lot to say. So we'll see. I think a commitment not to dilute shareholders anymore is probably coming, and that would be Really, really good news for AMC stock. Now, if we take a look at this Friday's expiration, we have in the money calls at 15,423, out the money calls at 64,391. So a lot of fuel on the fire here, potentially to the upside. Puts in the money at about 7,400 and puts out the money at about 28,000. So really good numbers here, especially to the call side. Again, a lot of fuel on the fire to see some of that upside momentum, as long as things are not, too bad with NVIDIA. Now, 10 and 2-year yield curve inversion still inverted 32 basis points, so not much to see there. And the percent of stocks above their 50-day moving average is now under 50%, currently at 49.61%. So the breadth in our markets has been getting even worse. So not great. AMC's RSI at 47.58, which is little under neutral, but pretty much neutral overall. The MACD trending upwards a little bit, the yellow line above the blue line, but still not that, bullish and or bearish right now. It's kind of neutral overall. So we'll see what happens. Let me know what you think about this information down below in the comment section. Now that NVIDIA earnings are probably out and you're seeing what the stock is doing, how do you think this will affect AMC coming into tomorrow and over the next coming days? Thank you for watching. Enjoy the rest of your day, and I will see you in the next one.